Okay, everyone, I think we're ready to start. I appreciate everybody being here today. We have Heather Scott, Jim Martin, Christine Kushner, Lindsay Mahaffey, Keith Sutton, Chris Haggerty, Karen Carter are all present right now at this moment. If anybody comes online, I'll mention them. And so today we've got our audit report, and we've had some good work done by the audit committee, and I'm looking forward to you hearing about that. It's been very good. I'd like to start with a motion for the approval of the minutes from the last meeting.
Motion to approve.
Second.
Okay, all in favor?
Aye.
Against? Okay, so at this time, we'll just go straight here to Mr. Winters, and he will introduce our committee.
All right, thank you, Ms. Cash, Superintendent Moore, and board members.
What?
She just did.
Oh, I'm sorry. Oh, go ahead.
Okay, thank you. So each year we have an external financial audit firm conduct a review of the Wake County Public Schools financial statement. The review is now complete. As of Friday, we received the local government commission's approval. They were a little behind in what they were working on, so we just received it Friday. So the books were printed yesterday, so the ink may still be wet. This afternoon, you'll hear from the chair of the board's audit committee and also from the audit firm. And following their presentation, I'll share highlights of the report. Dixon Hughes Goodman presented the financial report to the audit committee on December 6th. This is the first year of a 3-year renewable contract with Dixon Hughes Goodman. This was approved in the spring of 2021. We had previously been in a 3-year contract with Dixon Hughes, and we put out the audit for bid, and they won the bid again. The audit committee requirements in Board Policy 8810. We're one of the few school systems nationally and the only school system in North Carolina that I know of that has an audit committee. This afternoon, we have our audit committee chair, Laird Hepburn, to share the audit committee report on the financials. Then following Mr. Hepburn, Tyler Beatty, a managing director with Dixon Hughes, will present a summary of the audit from the external auditor's perspective. The PowerPoint should be, well, it is, should be in your assembly, and we have that pulled up now. So I'll turn it over to Mr. Hepburn to share the audit committee report.
Thank you so much, Mark, and good afternoon, board members, Superintendent Moore. It's my pleasure to represent the audit committee in bringing the audit report to you. As Mark's already said, this is an annual event, so it's nothing new. I've not met many of you, but I'm Laird Hepburn, and many of you know Sarah Martin, who recently stepped away from the committee, so I'm the new chair. And it is really neat to be able to be part of the community and to be able to see what's going on financially and know that in many ways the board is embattled in some areas, and in other areas you really get to see that your team is doing a fantastic job. And so DHG, Tyler Beatty, is going to present the report to you today. They're bringing an unmodified opinion, which is the best you can get. And there are a lot of great things going on in there. If you have any questions, he's the man to ask, not me. I'm only part of the team that kind of looks over this from the outside and brings that community perspective. So thank you for allowing me to do that. And if nothing else, I'll turn it over to Tyler.
Good afternoon. It's good to be here with you guys today. As Mark mentioned, my name is Tyler Beatty. I am a managing director with DHG, that is the accounting firm that performed the 2021 financial statement audit and the single audit. Before we get through our presentation today, I did want to thank the Wake Finance and Accounting team, Mark, Jeanette, and was able to spend a little bit of time with Robin again this year on the preparation of the ACFR. As you guys can imagine, an audit's almost like a second job for your accounting team as we're going through that process. There's a significant amount of requests, invoices, copies, and the finance team has always been transparent and timely in helping assist us, which allows us to get through the audit in a consistent and timely manner and issue the report. As Mark has mentioned, the audit's been released by DHG. It has been uploaded to the LGC, and it has been approved, and it's currently being submitted to the Federal Audit Clearinghouse. As part of the agenda today, and we'll go to the next slide, agenda, we'll discuss quickly the audit results, which Laird mentioned already. We'll review the communication report to the board, which is the separate report that you should have received in addition to the ACFR. This report has the required communications that we are to make to you guys as those charged with governance. We'll do a quick review of the financial highlights, and then we'll do a quick review of our compliance or single audit. Next slide. Next slide. So on this slide, we do have an excerpt of our audit opinion. The full opinion can be found on page 1 of the ACFR. And as Laird mentioned, this opinion is considered an unmodified opinion, which again is the opinion that you want to receive as a board. And this opinion lets report readers of the ACFR know that the disclosures and the amounts comprised in the ACFR is materially accurate. Next slide. Next slide. So there are various aspects of the audit process that we're required to communicate to the board. This report will be presented and is presented The significant components of the report to the communications of the board includes any significant estimates or sensitive disclosures that was included in the ACFR. We've identified these as being the useful lives of depreciable assets, as well as the proportionate share of the net pension liability for the TSERS plan, as well as the proportionate share of the net OPEB liabilities for the RHBF fund and the DIPNC plan. If there were any difficulties or
Can you just talk about some of those acronyms that you just used throughout?
Oh, yeah.
3 or 4.
I'm sorry. So the TSERS plan is the Teachers and State Employees Retirement Plan. I won't go in too far detail unless needed, but it's a cost-sharing plan. So as Wake County Public Schools, you're required to report your allocable share of the net pension liability for that Teachers and State Retirement Plan. Similarly, the RHBF plan is the Retiree Health Benefit Fund. Again, it's a OPEB plan maintained by the state of North Carolina. And similarly, in accordance with the professional standards, you're required to report your proportionate share of that liability. And then lastly, the DIPNC plan is the Disability Income Plan of North Carolina. And similar, it's a state plan that you contribute to along with most other LEAs. And again, in accordance with the standards, you have to report on a full accrual basis your proportionate share of that liability.
And can you also mention OPEB and what that is?
Oh, yeah, apologies. So OPEB comprises that RHBF fund as well as the DIPNC plan, and OPEB means other post-employment benefits. So continuing on, again, if there were any difficulties or disagreements with management, they would be communicated in that communication report to the board. We're pleased to say that we didn't have any difficulties or disagreements with management as we performed our audit. Similarly, if there were any uncorrected misstatements, so if there was a misstatement that was identified as a part of our audit and it wasn't corrected, it would be reported in this report. Again, we're pleased to communicate that we didn't have any uncorrected misstatement as part of our audit procedures. And then lastly, we've also included the management representation letter in the appendix of this report. We're sharing this with you so you can see what representations were given to us over the course of the audit. Next slide. Next slide. Thank you. So what we've done is we've tried to pull out the most relevant financial statement highlights instead of having you thumb through the 250-plus page report of the ACFR. We'll move through this quickly because I know Mark's prepared a lot of information about the financials, so I don't want to steal his presentation. But I guess quickly, the first slide shows your revenues for the General and Restricted Fund, which is Fund 2 and Fund 8. The middle bar is the State Public School Fund, which is obviously your largest funding source for the board. And then on the very right is your federal grant revenues that's recorded in Fund 3. So talking briefly about your General and Restricted Fund revenues, which again is the orange bar on the very left. Your general fund revenues increased right around $11.8 million during this year, which was related to an $11.9 million increase from county appropriation. Other local revenues, which are primarily fines and forfeiture revenues, decreased slightly. Related to your Fund 8 revenues, it decreased right around $2.4 million, which was primarily due to decreases in indirect cost revenues of $2.2 million. Specific to the state funding, which again is the middle highest bar in the graph, obviously, again, it's the largest funding source for the board. It increased approximately $31 million in the current year when compared to the prior year. But this was primarily related to CARES Act funding, which increased $13.8 million, and State Public School Fund funding, which increased $23.8 million. There was some state COVID supplemental funds that were received in fiscal year 2020 that weren't received in 2021, and this would have been PRC 154 money. Since it wasn't received, that funding decreased by $3.8 million in the current year. And then lastly, your federal funding, which is Fund 3, increased $14.5 million, and this was primarily related to that Education Stabilization Fund, for which the board received $14.6 million in the current year. And there's a schedule of federal and state awards in your ACFR that presents all of the federal and state award grants that were received by the board in fiscal year 2021. That's located on page 138 of the ACFR. Next slide, please. So this slide shows an expenditure by purpose as a percentage of total general, state, and federal expenditures. And it'll give you a good representation of where monies are being spent each year. You'll notice that the board has consistently spent around 80% on instructional services, with the remaining 20% being spent on support services. As auditors, we would expect consistency from year to year, as this slide indicates. Next slide, please. So this slide shows your general fund balance for the current year along with the prior 2 years. So in fiscal year 2021, the board recognized a $37.6 million increase in general fund balance. And as auditors, we saw consistent increases in local fund balance for the majority of our LEA clients. And this suggests that the board was able to utilize additional and federal state funding related to COVID-19. The difference between the total fund balance, which is the blue bar on the very left side, and your available for appropriation fund balance, which is the orange bar in the middle, is related to $4.2 million restriction for inventory, as well as a $5 million restriction in fund balance for stabilization by state statute. These restricted amounts are pretty consistent and were consistent from this year to the prior year. And then lastly, your unassigned fund balance increased by only $9.4 million. This was due to additional assigned amounts for special projects and appropriated fund balance in fiscal year 2022. And again, as noted, almost all of our LEAs noted an increase in general fund balance in fiscal year 2021. It's our recommendation that the board should continue to remain conservative and strategically decide when to utilize fund balance. We always recommend that fund balance should primarily be used for one-time expenditures and not recurring expenditures. And we see and believe that the cost of education is going to continue to rise, but the support that you're receiving for the COVID-19 programs will eventually expire. Next slide, please. And then lastly, we've shown fund balance and ratios as a percentage of governmental expenditures. And this slide is just going to give you a visual representation of this. So you'll notice that total governmental expenditures from fiscal year 2021 to 2020 remained relatively consistent when compared to the prior year in 2020 when you exclude capital outlay expenditures. Because of this, you'll notice that these ratios increase because your fund balance increased. And then lastly, there's no state mandated threshold for fund balance requirements for LEAs. Next slide, please. So as part of government auditing standards, we're also required to evaluate the board's compliance with laws, regulations, contracts, and agreements, as well as grant agreements. Included in the AFR is an opinion known as our Yellow Book report, which summarizes the results of this. As a result of this Yellow Book compliance audit, we didn't have any findings to report. We're also required to evaluate the board's compliance with federal programs that are deemed to be major. We noted the Education Stabilization Fund, Coronavirus Relief Fund, and Child Nutrition Cluster, which were considered major and required to be audited. In fiscal year 2021, the OMB, or the Office of Management and Budget, identified the Coronavirus Relief Fund and the Education Stabilization Fund as high risk. This means that we're required to audit these programs regardless of our own internal risk assessment. We do expect the OMB, or the Office of Management and Budget, to continue to identify the COVID-19 programs as high risk, which means that they'll continue to be subject to single audit testing in accordance with the uniform guidance. Most importantly, we did not have any findings to report related to our compliance testing over federal awards for fiscal year 2021. Next slide. Lastly, we're also required to evaluate the board's compliance with state programs that are deemed to be major. We did note 2 programs in the current year which were considered to be major and were required to be audited. That was the State Public School Fund, which is required to be audited every year, as well as the Technology Fund. And again, we didn't have any findings to report as a result of these audits. Next slide. That concludes my presentation. Happy to answer any questions that might have arose.
Any board members? Ms. Johnson Hoffler joined us, so I just wanted to mention that as well. Do we have any questions right now prior to the presentation from Mark Winters? Yes, Dr. Martin.
Yeah, just for information's sake, thank you for the report, and it's always good to see the clean audit. I think it was slide 11 when you talked about the fund balance, you noted that there are no requirements for a fund balance level for an LEA. Because this is a topic that regularly comes up, is there a general, can you give us the general guidance for what size that fund balance ought to be for other governmental agencies other than LEAs? I mean, LEAs are kind of that asterisk so often, but in terms of fiscal management, there's kind of a wise amount. Can you give us a rough context?
Sure, yeah, and I'm sure Mark will speak more about fund balance. We get this question often, and unfortunately, it's really hard to answer specific to LEAs, and the reason for that is the ability for an LEA to carry fund balance is really determined by its relationship with the county. In some instances, some LEAs operate more on a reimbursement basis, which means they don't really have an ability to carry fund balance. In other instances, the relationship is as such that an LEA can carry fund balance. From our perspective, more is better. I know that's probably not the answer you're looking for, but I think as you think about operating your board of education, there are instances where primarily federal and state funding isn't received in time that the expenditures are incurred. So if you have no fund balance, there's no effort to float those funds, so that's a consideration. But also as well, again, as mentioned, all of our LEAs were able to increase fund balance this year because the ability of the board to shift some of these expenditures that were allowable to federal and state programs specifically related to COVID-19, as those programs became available, allowed the ability for the board to increase fund balance. And I'm sure Mark will speak to this, but it's almost similar to the ARA funding. As you think back 10 plus years ago, you had a significant increase in fund balance as those programs were eligible and the board was receiving money. If you look back historically, though, that fund balance continued to dwindle as the board still needed to incur expenditures, but those programs were expiring. We're forecasting probably a similar scenario with the circumstances that we're in right now. As far as government mandated thresholds, and Mark, check me here, but I believe the counties are required to carry 6%. There's 6 or 8. Okay. I was thinking 8. Okay. There is requirements from LGCs for counties. There's no state mandated threshold for LEAs. Again, there's a bunch of considerations, but we don't think it's fiscally responsible for the board not to have a local fund balance.
Thank you. Good comprehensive answer. I was even just hoping to have the external person validate that 6 to 8% is normal, and we're down at 2.7% of unassigned.
Yeah, I think it's fair to say it's normal, and I think if it increases, I don't think that's necessarily a negative thing.
No, I think quite the contrary. Fund balance is we all need a bit of a savings in our bank account. Yeah, so thanks for adding the perspective.
Ms. Cushman.
Thank you, Ms. Cash. And I have a quick question. Is there, and thank you for the presentation today. I know you work with other LEAs and other schools. Is there a state online source where we can compare ourselves to other schools just to have a point of comparison and perspective? Is there an easy way to check online, or do we have to attend every finance committee of every LEA?
No, great question. I think that the most comprehensive website would be the Federal Audit Clearinghouse. So again, as you're required, as well as all other LEAs in the state, units that receive federal and state funding are required to submit what's called a data collection form as well as their audit report to the Federal Audit Clearinghouse. I'm not going to tell you that all of 2021's up there.
Right.
But if you use the search function, you should be able to find every single Board of Education in the state's 2020 audit, and I believe it's previous 2 years on that website.
Thank you. Because I think as Chair Hepburn expressed, this is an area where I think Wake County Public Schools, well, I think we excel in every category, but I think particularly the accountability we show taxpayers for the funds, and it's a huge budget that we expend. We're very clear in auditing those funds and keeping track of them. So I think it's something that we should rightfully be very pleased with the staff and the work that's done on behalf of the district. So thank you for being part of that team, Mr. Beatty.
I appreciate it.
Thank you.
Okay, any other? Thank you. I mean, that's a very good job, and I appreciate that. You've done a lot of work with us, and I thank you for all that. Mr. Winters, you want to continue? We're very proud of our finance department and how they come through with great remarks, so thank you for that. So go ahead with your presentation.
All right. Thank you, Ms. Cash, and thank you, Tyler. I'm glad we have an answer now on fund balance. More is better. So that was a good answer for us. I'd like to thank all those who are involved with the audit, including the finance and budget, internal audit, Dixon Hughes, and the audit committee. It's unique to have an audit committee look at the financials before they come to the Board of Education. And I think that is an accountability piece that we've added many years ago. I think it was 2006 that we put it in place, and we really do appreciate their efforts. I'd also like to thank, so for many years I spoke of Robin Presley. So this year I'll also say that Jeanette Fuller is now our Senior Director of Accounting, and this was her first go-round with the financials. And so we contracted with Robin, who had been away for 6 months, following all rules and regulations. We contracted with Robin to come in and help. So both Robin and Jeanette really did a great job putting this together. So I do appreciate that. This document, if you go front to back, we have numbers throughout that are matching or a sum of, and they all match. And that's a lot of work to go through all these pages and put that together. So I'm very appreciative of that. So I am going to make you thumb through. Tyler said he wouldn't make you thumb through. Well, guess what? So I am a little bit, but not a lot. It's just be a few pages that I'll get you to look at. I want to give you sort of an orientation to the financials. You can look at it. You can ask questions today. It may be better for you to ask questions once we go through this and you have a chance to look at the full document. So if we can have the new presentation up. Okay, here we go. Okay, next slide. And actually, yeah, so for the agenda today, we're going to do an overview of the ACFR, and the ACFR is now the title of this report per GASB. We'll look at the single audit section, review the statistical section, the general fund financials, and finally we'll end up with a review of the fund balance. Next slide. Okay, so the financials are set up in 4 sections. The introductory section includes a letter of transmittal, which provides information on the county, the school system, and the audit process. On pages Roman numeral 8 and 9, we mention this every year. You'll see the board received the Award of Excellence from the Association of School Business Officials and the Government Finance Officers Association. And this is the 32nd consecutive year that we received those awards, so we're proud of that. The financial section includes the management's discussion and analysis beginning on page 4, which summarizes the performance in the fiscal year. The financial reports begin on page 13 and include detailed statements of revenues and expenditures and the balance sheets along with the footnotes. The statistical section begins on page 93. This provides global information about the school system and the county. The schedules associated with the county are directly from the Wake County Government Financial Report. And this provides a little bit of summary information. The single audit section begins on page 128 and includes the auditor's report on internal controls and compliance. Next slide. So the schedule of federal and state awards, expenditures of federal, state awards begin on page 138, near the end of the book. So this is 138 through 140. The schedule provides information on grant revenues and expenditures. And as Tyler mentioned earlier, on page 139, their expenditures associated with COVID-19 grants are listed. So in the third column on page 139, if you scroll down that column to, it's called grantors number 163, 163 through 170 are COVID-related expenditures. And this is expenditures, not budget. And if you go to the bottom section of the page, you'll see 121 through 138. And again, 373, which was the funding that was shared with us through Wake County. And, we've provided updates to you during the year on these expenditures. The most recent was probably October, November through the first quarter. This is expenditures through June. If you'll turn back a couple of pages to page 134. This provides a summary of the auditor's results. Again, it was mentioned that we had an unmodified opinion, which is the goal of the school system, to have a clean report and a true representation of the financial status. You can look on page 134 and 135 and see that we have no findings. To my knowledge, we have not had a finding in 6 to 8 years, which we're very proud of. I tell you, come about September or October, I'm walking in either Jeanette's or Robin's office saying, do we have any finding yet? Because with the amount of transactions and the numbers and the things that we do in the school system, it floors me that staff does what they do and we have no findings, because they report minor issues can be a finding. So I'm very proud of what they do. So that's a big deal. Okay, next slide.
Excuse me.
I'm sorry. Yes, sir.
Just really quickly, could you give us an example of like a typical finding or something that would be highlighted? Oh, it's coming up in another one? All right, I'll defer.
No. I'll let.
In another district.
Yeah.
Yeah, I'll let Tyler do it.
Okay.
Yeah, since we don't have any.
Yeah.
Yeah, well,
What are the kinds of things that
Sure.
we're avoiding or what we would look for?
Yeah, I mean, I think back to an earlier comment, if you were to look at the Federal Audit Clearinghouse, you could pull every single other LEA in the state. Again, I don't want to discount the fact that we didn't have any findings that rose to the level of significant or material and were required to be reported. We do have findings. We do have pervasive findings at other LEAs. I guess to your specific question, a specific example would be, as we're doing our single audit testing, we're selecting a sample based on risk to look at invoices, POs related to the specific programs. What we're doing when we get that supported documentation is to ensure that the internal policy's been followed. There's a PO in place. It's got the pre-audit certificate. It was approved before being incurred, which means it was approved before the invoice was dated. The invoice was reviewed and approved before the check was cut. So that's the internal policy. Subsequent to that, we're also looking at that information to ensure it's what's considered an allowable cost for that specific program. In other words, that it followed the program guidance. So for that circumstance right there, if we had any what we would call question costs based on our review, if a policy wasn't followed, if it appeared that the cost wasn't allowable, in excess of $25,000, it's required to be reported. Now, if we find an instance where there's a question cost and it's lower than $25,000, we can't stop there. That's what's called a known question cost. We also have to extrapolate and think through the likely question cost. So we didn't have any findings, likely or known, in excess of $25,000 that would result in a finding. So that's specific to your federal and your state programs. The first report that I talked about, which was the Yellow Book report, that's a really focus on compliance as well as internal controls for the board. In that instance, an example of findings would be any significant deficiencies. Think about it as any break in controls, any controls not being followed that's pervasive or significant. If we identified that during our audit process, it would be required to be reported. Examples of that would be budget violations. If there were incurred expenditures over budget, that's a finding. If bank reconciliations aren't being prepared, if purchase orders aren't being issued before invoice approval. Those are some circumstances that come up off the top of my head. Again, if you were to spend an hour on that federal audit clearinghouse and pull some other counties, you would find a complete menu of findings that are identified.
Some people, and I'm smiling as I say this, in this school system think our internal controls are a bit tedious, but it's intentional. And when anybody asks the question, we let them know it's to protect them and also the Board of Education. We feel like that's important to build strong internal controls. Okay, back to the slides. If we'll pull up slide 5. So again, we're in the statistical section, and if you'll turn to pages 103 and 104, I often say this, I would think as a board member, this is a section that you would like to look at because it takes all the information that's throughout this document and it summarizes much of it. So you can see what's going on from the sort of the global view of the school system. So on page 103, 104, we have the per pupil expenditures by function. If you go to the right of 104, you see the total of $12,013 is the per pupil expenditure. If you go 2 columns to your left, you see the total operating of $10,373. And I refer to the total operating of $10,373 because if we quit building today, that's what it would cost to operate this school system. Tyler mentioned that instructional services are 80%, which is a high percentage in the school system to have it 80% of the total expenditures, and we've been in that range for several years. A couple other things I want to note. You see that there was about a $400 per student increase in 2021, which has something to do with increase of revenue, which also includes COVID funding. But if you look in the left-hand column, due to the pandemic last year, we had 3,000 less students. So the number is total operating divided by your number of students. So if we had a similar number, the gain only would have been $200. So it's not as large a gain per student as it appears in the book if you look at just that column only. So I did want to note that. And finally, I want to note, so a lot of times we're asked what are non-program charges. To the right of page 103. So the non-program charges has a couple of items in it, but the major item are the payouts, the local payouts to charter schools. So as you see on the slide, in 2021, we paid out just over $44 million. If you go to the bottom of that page for 2012, you'll see where we paid out close to $12 million. It shows up in that category, and that is part of your per pupil, per student in Wake County includes that $290 in the non-program charge. So just making you aware. Next slide. So if we go back to page 100, again, another good document to look at. is the fund balance over the last 10 years. Now, the top half of that page is the general fund, which is our main concern. And you see in the graph the increase in fund balance over the last couple of years, the increase in unassigned fund balance also. But I'll point you to the right-hand page of 101, and you'll see fund balances around $90 million. And that was the tail end of the recession. Tyler spoke to this earlier about the ARA funding and the fact that we received federal funding, and school districts across the state during that time built funding and fund balance because we had that extra federal dollars coming in. So we built fund balance. You'll see after 2014, it started declining. And then in 2020 and 21, again, with the federal funding coming in to school systems, the fund balance has increased again. And we do think that's an important thing to do. It's a protection because that federal funding will go away, and we want to protect ourselves for that future cliff. Yes, ma'am.
So, Mr. Winters, thank you. And I know we talk a lot about fund balance, but it is the reserve that we have. And one of the things as we're going forward, you know, those numbers look big and they change, but as we're talking about the number of students and our costs and assigned versus unassigned, has our unassigned fund balance, I mean, it's dropped down and gone up percentage-wise, but can you talk a little bit about that? Because looking at it dollar-wise, looking at that gray line, it looks like it shot up, but if we talk about the total of our budget versus the percentage of fund balance.
Yeah, so I'm going to talk about fund balance in a little bit more detail, and I'll give you a percentage. If you.
I'll wait then.
Okay, good. Okay, so again, this is sort of related to fund balance. If you'll turn to page 71, this is our general fund financial statement. All the financial statements are within this area. We're just going to talk about general fund, and the revenues on page 71 include the county appropriation. If you go to well, I just want to make sure you know where it is when you have questions. So if you go to page 74, well, I'd already said my part on page 71. Okay, so we're on page 74, 2021 actuals. You'll see excess revenues over expenditures in that second column of $42 million. So this is how you create fund balance, is revenues over expenditures. We've often talked about budget issues. It's not really a budget issue, it's revenues over expenditure. So we had excess revenues of $42 million, and you'll see there was a transaction of $3.6 million, but the total net change in fund balance was $39 million. If we can go to slide 7. Can y'all see slide 7? Okay. So there it is. Okay, so the reason for the excess, we had placed spending restrictions on budget managers in April of 2020 due to the pandemic and the concerns and the fear of going into a recession. So we put spending restrictions in place in April of 2020 that carried forward into the 2021 year. We had savings due to schools not being fully operational during the 2021 year, and savings because we received federal funds. I will say we also maximized state funds, and I'll talk about that more in just a second. If you'll go to the next slide. So while I say budget isn't a great example, I did look throughout Fund 2 to see where the biggest differences were in expenditures versus budget. So these are the major categories where we had savings. I mean, substitute teachers, salaries and benefits. And again, that is a huge piece of this maximization of state funds, because the state held us harmless on the ADM in the 2021 school year. So we were able to move salaries of what may have been some local teachers or local positions onto the state funds, so we could use those state funds, thus having local savings. So the salaries and benefits is a great example of state maximization. Utilities is a great example of not operating full-time in the schools throughout the year. Contract categories and supplies and repair parts is a great example of the ESSER funding or federal COVID funding. So all of those ideas played into having a reduction in these amounts. Okay, next slide. I think this is the final page I'm going to have you turn to. If you'll turn to page 17. 17. This is the balance sheet. So this is the makeup of our fund balance. So it's the first column on the page. If you go toward the end of that column, you'll see a total fund balance of $128.5 million. Consists of categories beginning with the non-spendable inventories and prepaid expenses up at the top of the fund balance area. This category included our warehouse, instructional warehouse, and transportation and maintenance warehouse inventories. Their inventory categories, the funding has been spent and not available for use, because there's always a question on fund balance and whether it's available for use. This is not available for use. The next section is restricted, and you'll see stabilization by state statute. These are accounts receivable, funds owed to the system but not collected on June 30th, and carry forward encumbrances. Those are purchase orders that were in place in the month of June and the transaction did not complete, so we carried forward those dollars into the following year. It also includes a small amount for an energy savings project that we began several years ago, and we still have a small amount restricted. They're restricted by use and not available in any other manner. As you continue down the column, the next section is assigned fund balance. I'll come back to special projects at the end. First is the insurance line of $13.8 million. That includes the school's system's self-insurance. So we are self-insured for dental and workers' compensation, and also a reserve for liability and property claims and premiums. We established this reserve to cover potential claims below the deductible limits. We've increased our deductible limits over time so we could afford the premium. So our current deductibles are $25,000 for building and $250,000 for liability. The $2 million in the benefit plan, flexible benefit plan, represents the balance of funds collected from employees and not spent to date on their medical and dependent care flex account. So still available to be spent, but it's just what was on the books on June 30th. And the $20.1 million of subsequent years' expenditures are obligated to balance the current year's budget. This amount was above the board policy of 50%. You waived this policy in a budget meeting last year. And then the final category I'll discuss is special projects at $20.1 million. Included in this balance are annual items reserved, such as operating dollars for new schools for opening, funds to reimburse the state for any salary exception reconciliation. We set aside funds in the local budget for carryover textbook funds, and we have a reserve to protect against pension liability associated with the contribution-based cap law. This year, we also have a student membership reconciliation, a reserve to provide an upgrade for the Oracle financial system, and funds were set aside for a one-time bonus. And I will have another statement about something we have on the consent agenda tonight, and I'll get to that in just a second. The final category is unassigned fund balance. These funds are available to the Board of Education to appropriate for a specific purpose. This should be used for one-time expenditures or emergency expenditures. Appropriation for recurring expenditures place the board at risk in a following year. The $44.6 million equals 2.1% of our total operating expenditures. So, Ms. Mahaffey, that gives you an idea. It's 2.1% of total operating. And just to give you another idea, I've compared that number against our total operating expenditures for the year. Annually, our total operating expenditures relate to $6.3 million a day, which means our unassigned fund balance gives us 7 days of operating. So it costs $6.3 million a day to operate our school system. With a $44.6 million unassigned fund balance, it basically gives us 7 days of operating. Ms. Mahaffey, does that answer your question?
And more, thank you.
Okay, thank you. Now, per board
Mark,
policy, yes, I'm sorry.
What's typically sort of the goal or what we like to have in terms of that percentage and the number of days of operating expenses?
Yeah, the old theory was a month, but I'll let you.
Yeah, I mean, I think we like to equate it to, like, think about your own personal savings account. If your mortgage is coming every month, what would you personally be comfortable with? We like to say 30 days. I think Mark mentioned 7. So, again, that's why, and 30 days is a goal, right? You're never going to get there. But when we think about 7 days, what we look at as auditors, that means if funding were to cease, if something were to happen, if you had to float 7 days, state, federal, something happens, how long can you operate before something's bad? 7 days. Again, when you look at numbers, it seems high. When you equate it to days, I think you have a better realization of where you're at.
Most taxing authority boards would want at least 30 days. And I think most are trying to carry more than that now.
But again, I mean, so in LEAs, what is a norm? We don't have a norm, right, for state of North Carolina LEAs?
Yeah, great question. And again, it's hard to benchmark Wake Public Schools because you guys are so much larger than most of your peer counties. But we've seen anywhere from 7 days, which is where you're at, up to 15 days. I don't know that we work with any LEA that's got a 30-day operating balance currently in the state.
Okay, thanks.
I will say most school systems, if there is a particular school system you want to look at, most of the large districts, at least in North Carolina, have their financials online. I often go out there and compare ourselves. So if it was Charlotte Mecklenburg or someone else, you could go see where they sit. The $44.6 million is 8.2% of this year's county appropriation, and I mention that because in Board Policy 8101, we align our fund balance percentage to the current year's county appropriation. Our goal is to have 6, and in the board policy, we reference that we will return anything above 6%. We do not recommend doing that, and we will bring a waiver to the board to request approval to waive that policy. And in working with the county, we've not had any pushback recently on that.
Can I ask one more question? If we were to have 30 days of operating unassigned fund balance, what percent of our operating balance would that be? Because we have 7 days now with, what?
About
30%, give or take.
Yeah, you're right around 8% of your operating. Total operating?
30 days of, we said we had 7 days of keeping our schools open with the percent of operating unassigned balance that we have now, right?
Mm-hmm.
What would it take, what percent would it be to have 30 days to keep our schools open?
I think that would be 8%.
Okay, 8%.
No, it's right around 8. No. If you will go to the next slide, please. So on tonight's consent agenda is a request to appropriate $8.7 million of special projects to cover immediate needs. And slide 10 lists the projects that are within that request tonight, the $8.7 million. The average daily membership reconciliation, we've set aside funds for the past couple of years. We're continuing to do it this year. Part of this is due to staff at the schools fluctuating, whether we have enough students to create another teaching position or we do not. We throw in the mix of a virtual academy this year, and we've had more reconciliation issues. So we have $6 million for that. Several other items, the next few items are all related to the difficulty of operating a business during COVID. We either were not billed for services that were performed in 2021. We did not receive the bills from the vendors. Many vendors did not bill us for 5 months after they completed the work. So we set aside these funds in the prior year's financials in order to pay them. We did not want to use this year's funds to pay for prior year work. There is a fire suppression system for buses. We are hoping to purchase, so we set aside those dollars. CTE computers is the same example of not receiving the items on time or the invoice. The ESCO is the energy savers dollars that we will use to pay off the loan with the Energy Savers project. And then salary exceptions, we are down to $8,000. Once again, we have a tremendous payroll amount that we pay on a monthly basis, and to only have $8,000 worth of salary exception is a good place to be.
In regards to salary exceptions? Yeah, I think from our perspective, those appear to be all one-time expenditures.
So if we go to the next slide, a few years ago, I shared this information with you. Just because we do a lot with the students and the families in Wake County, but this is sort of a money issue. So this is what we contribute to the local economy, and I think it's a good view. So we pay $1 billion worth of payroll. And the matching retirement is what we pay to the state retirement system for our employees. What Wake County, this is not what they are charged to pay to the retirement system. This is what we pay. The insurance is what we pay to the state health plan for our employees. We do receive a refund for sales tax in the following year from local government. So the county sales tax of $1.7 million, we will receive a refund in the following year. However, the state sales tax that we pay, we do not receive a refund for. So that state sales tax stays with the state of North Carolina. And then you see what our employees pay for state payroll tax and federal payroll tax. I know this is a little bit of a different schedule that I did a few years ago, but I do think it's important to see what we contribute to the economy in Wake County and how large we are and the difference it makes. And that concludes my presentation, and Tyler and I are happy to answer any questions if you have them.
Ms. Kushner?
Thank you, Ms. Cash. And Mr. Winters, on 103, you told us that charter school payments are in that non-program. Can you tell us what else is in that category? Is it a
Indirect cost.
Indirect.
For grants? the indirect costs that's paid and then for grants.
And it's those two? Okay. And we've gotten some feedback through public comment around audits of booster clubs, and I know we have the section of individual school funds, but what's the process that the school system has for audits of school-affiliated booster clubs?
Okay, so both our internal auditors and our external auditors review our school Fund 6 accounts, the working funds at the schools. We do not audit booster clubs of any type. They are, if we started attempting to control the booster clubs, PTAs and booster clubs, they would become a component unit of Wake County Public Schools, and we would have every version of the booster club in here. So each booster club should do their own individual audit, should contact a CPA, and perform their own audits. The only time we would be involved is if one of our employees somehow was involved with the booster club and something might have happened financially, we would bring in our internal audit to look at that. But otherwise, they are independent of Wake County Public School System.
Like PTAs, the booster clubs are independent, and
Right.
they should be doing their own fiscal reviews. Thank you.
Yeah, they're a
That's helpful.
501c3, so they're registered as a 501c3, and they need to go through their own audit process.
That's helpful, thank you.
And I'll just add a general recommendation that there should be no commingling of funds between an individual school and PTA, separate
Thank you, Mr. Bay.
organizations.
That's good to also, just to be able to address some of the concerns that have been raised, and I think it's important for there to be separation, so thank you.
I think that was a really good presentation. I think that gave us a lot of information, and I appreciate that, and I do want to repeat how proud I am of the Finance Committee and the people that are here with you, Mr. Winters, that do all the work that is unbelievable. And for the auditing committee and for the auditors, thank you so much for the service that you give us. I always feel so much better after I see something like that. And I always feel better, but I always feel good. But this is always good to see when we see such a concrete and thorough look at our financial reports and our expenditures, and also the things that are expenses, but also expenditures and expenses, but also what we get for revenue. Gives us a good look at a comparison of what we need to be seeking or what we have in front of us. So I think if there's no, Chair Sutton?
I just again want to thank the audit team, but particularly our finance staff, Mr. Winters, Superintendent Moore. It is no small feat when you think about the size of our organization now, almost $2 billion, the number of, as Mr. Winters alluded to, the number of transactions that we go through, the number of adjustments that come through every month, and to have 9 years of no findings, I think you said almost 32 years of award-winning reports and that sort of thing, that is certainly to be commended, and we appreciate the work of your staff, your team, the oversight, Superintendent Moore, that you all provide. It's a Herculean task because we are not a small organization by any stretch, and so hats off to you all, and again, just thank you for your work.
Okay, well said. Okay, thank you again for this time. Appreciate it. I believe we have no other agenda items, so that concludes our finance meeting. Thank you.
All right, we are scheduled to start at 3 o'clock with our work session, so we'll give about 5 minutes to let staff transition, and we'll start momentarily.